Welcome everyone. This is John Sheely at Traders Country Club, and I want to talk about an update in regards to the price corrections that we had from October 21st. I first discussed on the possibility of a correction because the prices were relatively high, well above the moving averages. We'll take a look at that, the changes that have occurred, and then of course what has occurred in the last few days. Of course, we must have our important disclosure. There's a high degree of risk involved in all types of trading. That includes stocks, options, commodities, or forex currency, and trading is not suitable for all investors. And of course, past results are not necessarily indicative of future returns. In the original update, I was talking about the possibility that there was going to be a correction because of the strength of the market well above the moving average. This is the 50-period moving average, and we only plot this because it's very popular among television and other television programs that uses the 50-period simple moving average. If price reaches anywhere between 6 and 7 average true range above the moving average, generally prices begin to have a sideways or at least a correction of some kind. This is what I had forecasted on the 21st, and granted there we were looking at the spider for the SP 500 and the Dow Jones and even the Nasdaq. Now the Dow Jones was the strongest and basically almost didn't hardly have a correction at all. It primarily got flat for a week or two, but not much. It continued on higher and higher. The spider, however, did indeed move flat. This is why I suggested to not take a particular position at that particular time. Now, I did not say at all that this was going to be a change to from a bull trend to a bear trend or even having a large correction. I'm just saying that prices normally reach this zone, and you're beginning to see it right here, that prices generally prices actually to stall the momentum just for a little bit. Actually, correction actually occurred a little bit more than 3 average true range from the highs. That is actually the type of correction that we were looking for. As it turns out, it occurred within a couple of days after our update on the 21st. Instead, prices moved sideways. The bull market, as we discussed, could continue on. However, take a look at the price action again into the zone that is above 6 and 7 average true range above the moving average. We are seeing the same thing. Prices will generally have a correction, or at least the momentum is going to slow down, and you're beginning to actually see that in the last several days. Here we're taking a look at all of 2017, and this is the zone of prices that I discuss from time to time. This is 6 and 7 average true range above the 50-period moving average, and as you see, it actually occurred here, just a typical ABC type of correction. These little dots right here, again, measure the correction from the highs based upon average true range. And here we see it is in March. It's beginning to have a correction. So you can see why I discuss this area of the chart that occurred in the last several weeks here. And we're beginning to have that correction here. This is why I'm saying a typical correction from this type of strength, a change of momentum, is probably going to occur fairly soon. This being on December the 6th. And as you can tell, it is time that prices actually may have a correction. Here I'm showing you the triple Qs. This is the zone that I discussed. Does not mean that the correction is going to occur immediately. All it is a change of momentum, and you can see that occurred in March. Here we have actually a very large, fast correction for a good size. This is more than 3 average true range from the highs. It reached this zone again, but it took several weeks. But once that several weeks occurs, here comes that larger correction. This is what I'm discussing now on our current update because you can see the prices began to hit this zone as well. And this is when you're seeing a much larger now correction in the NASDAQ. So you're going to see a lot of technical stocks have a correction. Actually, many of them are actually beginning to change and actually move underneath their moving averages on the daily charts. So watch this. This is probably just a correction, but it may be a deeper correction that many people understand. This is John Sheely at Traders Country Club.